Welcome to WhiteBlock Invest. Welcome to the future. The world is evolving at phenomenal pace, and I believe we haven't seen anything yet. AI, blockchain, big data, robotics, and quantum computing are about to catapult us even further into the future. Take Bitcoin, for example. It was created on January 3rd, 2009, and was worth nothing initially. Today, only 15 years later, a single Bitcoin trades for over $60,000. If you're here, it shows that you're curious and still amongst the early adopters. Congratulations. But it also means you're seeking for answers. What is Bitcoin? What is blockchain? Is it the right time to invest? Does it hold real value, real utility? You're in the right place. We're going to demystify all of this in this video. Are you ready? First, let's start with blockchain. A blockchain is like a big electronic notebook, open and accessible to everyone. Each block is like a page in this notebook where transactions are recorded one by one and can be modified afterward. Each transaction is verified and signed by a computational process to ensure its authenticity, which guarantees the system's security and transparency. The blockchain is made up of multiple blocks linked together by a secure coding algorithm. The code is open source, meaning that anyone can audit it. Blockchain is therefore transparent, decentralized, and secure. Bitcoin was created in 2009 and is the first practical application of blockchain. Unlike traditional bank transfer, Bitcoin allows direct transaction without a trusted third party such as a bank. All of this happens without geographical limits and with very low fees. Anyone can also participate in securing the blockchain, which is where cryptocurrency miners comes in. In exchange for their work, miners are rewarded with Bitcoin. Bitcoin supply is limited to 21 millions, which creates its scarcity, giving it the status of digital gold. Let's illustrate this with two graphs. You can see that Bitcoin is based on strong fundamentals, similar to gold due to its limited supply. In contrast, the explosion of American debt results from unlimited, arbitrary money printing by a centralized authority. One of the most important takeaways that applies not only in crypto, but also in traditional finance is this. It's not the asset that appreciates, but the currency that depreciates. Let's compare the adoption of crypto assets with that of the internet. Currently, we are the equivalent of the year 2000 for the internet, right before its explosion. And this time, adoption is expected to be even faster. It's not too late to invest. Let me explain why. Financial markets, regardless of the type, operate in cycles. Bull markets for the rising markets and bear markets for declining markets. We're still at the beginning of an upward trend. How do we know? In crypto, cycles are driven by Bitcoin halving phenomenon. Remember, miners earn rewards for securing the blockchain. Initially, in 2009, miners could share up to 50 Bitcoin per block. However, this reward halves every 4 years, a process known as halving. Today, there are only 3.125 Bitcoin as a reward per miner block. The last halving occurred on April 20th, which historically marks the end of the bear market. Let's have a look at what happened during the previous cycles. In 2012, 371 days after the halving, Bitcoin hit its first peak, delivering a return of over 9,000%. In 2016, 523 days after the halving, Bitcoin hit another peak with a return of over 2,900%. After the 2020 halving, Bitcoin reached a solid performance of over 570% after 546 days. You'll notice that performances are becoming more moderate, which is simply due to the maturing markets. Now, major investment funds are involved, which wasn't the case before. Despite this, we can still reasonably expect a modest 100% return, still a competing prospect, wouldn't you agree? And if you're not yet fully convinced about Bitcoin's potential, this chart should reassure you. Here, you can see how Bitcoin total market cap remains quite small compared to gold or US equities. It's clear that just a bit more institutional interest could massively drive funds into the crypto industry and consequently push prices higher. And as I mentioned, institutional investors are already entering the market. Take Fidelity, the world's fourth largest institutional firm, and BlackRock, the titan of global finance. These entities, among others, recently launched ETFs based on Bitcoin and Ethereum. These ETFs make it much easier for traditional companies lacking of technical expertise to gain exposure to the crypto assets. Some countries have also made Bitcoin legal tender, like El Salvador. Its president Nayib Bukele has invested part of the state's treasury in Bitcoin, believing that the asset will appreciate and potentially save his country's economy. You've probably also seen on social media that Elon Musk has invested heavily in Bitcoin through his company Tesla, but it seems small compared to Michael Saylor, CEO of MicroStrategy, who has accumulated more Bitcoin than some institutional funds. We can't talk about investment without mentioning psychology. Indeed, it plays a crucial role for any investor. Do you see this curve? The goal is to buy at the beginning, at the bottom when no one is talking about it, and to sell at the top when everyone is talking about it. Simple, right? Well, it sounds simple, but in reality, it's entirely counterintuitive. Let me explain what usually happens. When no one talks about it, as it is the case now, you wouldn't logically think to invest. But when it's on the news and your aunt mentioned Bitcoin at a family dinner, then everyone is interested. But by then, it's already too late. This is unfortunately why most people lose money in crypto and investing in general. But luckily, you're in the right place. If you want to invest in the future, the time is now. To discover our precise strategies and benefit from our personalized support, schedule an appointment today. Don't miss the train, it's still on time, but it won't last forever.